And welcome into the show. Let's, in the material space, ponder what's ahead for Fortescue now. Of course, moving on the fact that it's missed its iron ore targets, but it's completed expansion, importantly. Net, what's your view?
Carson, it's been a really interesting one for Fortescue today. I mean, they've come out with this record run rate production of 160 million tonnes ahead of their guidance, and we're still seeing the market reacting negatively. But I do suspect that is a result of investors focusing on some of those negative points that have come out of the result today. But looking long term on this stock, we do in fact still think there is a bit of value in Fortescue, particularly given that we have seen an increase in this production rate above their 155 million tonnes that they have been guiding to. So long as that iron ore price can stay above their break-even price of about $72, then we do still remain fairly optimistic on this stock, and it does look like that iron ore price is well above that at the moment. We do know that it is highly leveraged, obviously, to a fall in that iron ore price, and there are some concerns around at the moment that it may in fact start falling again. But overall, we do remain positive. We do think that they should start to generate some free cash flow growth as a result of this expansion in their production, and of course their continued focus on reducing their cost base as well. I think the next focus for Fortescue really will be in terms of reducing some of their debt, focusing on paying dividends, and of course focusing on some low-cost expansion opportunities as well. We do expect that they will start to reduce their debt by about $2 billion in FY14. We know that their full-year production report is due to come out next week, so we'll hear a bit further on that. And we do expect their gearing to reduce to about 44%. So given this strong production report today, we do remain pretty optimistic on the outlook, despite seeing a bit of negative movement in the share price today.
It's interesting, Leanne, if we switch and we talk CSR, just yesterday the chief executive was pretty bullish on home building, but Bell Potter in the events downgraded it to a hold, so it's, I suppose, biding its time and wanting to see that story play out, one suspects. The price target, on the other hand, has gone up to $379 from $370. Just walk me through this one.
That's exactly right, Carson. If we have a look firstly at that AGM yesterday, we did see the stock price up about 3% off the back of some positive commentary from that AGM. They did in fact indicate that the outlook is improving with some of those recent pickup in detached dwelling approvals, as well as rising aluminium premiums, and of course a recovery in their glass business as well. They are expecting that all of these will contribute to about a 50% uplift in net profits in FY15. Looking at that target price, that in fact has been lifted by Bell Potter, reflecting a higher net present value for that aluminium business, so they do expect that to continue growing. But in terms of the downgrade to a hold, it does look like it is trading at quite high levels at the moment. So since the start of the year, the stock is up about 40%, and it is in fact trading at about a 6% premium to some of its peers. So I think as a result of it looking a little bit toppy at the moment, they have in fact provided that downgrade, and I think a lot of the share price is reflecting some of the positive outlook on the stock. It is trading on an FY16 price to earnings ratio of about 13 times, which in fact is about 15% above its 10-year historical average. So as a result, we have seen this downgrade coming through, but overall the outlook on the stock does still remain optimistic, and I suppose if we do see any pullback, that may be an opportunity for investors to get back in.
Leanne, in a sentence, just to understand, I must hurry if you could on this last one. The banks have staged that turnaround. They'd been on the back foot this morning, care of those jitters inside Portugal for known reasons. You know, that's pretty impressive, is it not? That has done that, 180 effectively on performance.
Certainly is, Carson. We did see them underperforming this morning, but I think as a result of that stronger than expected housing data, or housing finance data, that did come through earlier today, we have in fact seen a lot of those banking stocks turn around. So we saw that housing data coming through relatively flat, where most analysts out there were expecting that we would in fact see a fall. So I think as a result, we have in fact seen a bit of an uptick in a lot of those financials and bank stocks today.
Great to talk. Thank you as always.
Thanks, Carson.